The U.S. population has increased by more than 30 million people since the housing bubble burst, yet the pace of new home construction has dropped dramatically. This lack of new home production has created scarcity in the for-sale market, and I wondered if it was having a similar impact on the for-rent market too. The real estate doomsayers are getting louder in their calls for the collapse of the housing market, so I continue my quest to find supporting or opposing evidence in order to guide our customers. During the buildup of the housing bubble in 2006, we saw the inventory of homes for sale continue to swell, even as new contracts on homes declined. For this reason, I keep a very close eye on the supply of homes for sale. In my pursuit to find evidence of an impending housing bubble, I continue instead to find evidence of the opposite. Today, I'm sharing a rental market trend and my thoughts on its impact on home prices. I've included a link below to the supply of homes for sale in Tallahassee. You will notice that as prices drop below the top 5% of the market, down into the rental range of home values, the percentage of homes under contract with buyers rises to levels we do not normally see in October. When we look at the overall housing market, we need to consider the options that consumers face. They can buy or they can rent. They can be in a single-family home, a multifamily home, a mobile home, an extended stay hotel or hospital, a student dormitory, military barracks, or they can even live in a van down by the river. All of these property types must be considered when evaluating the overall health of the housing market, because strength in one could very well cause weakness in another. For example, if a significant percentage of single-family home investors decided to sell their homes, it would add homes to the for-sale market while removing homes from the for-rent market. In the short term, we might see home price growth slow down while rents rise. So it's important to study each segment of the housing market, looking for supporting or opposing trends that can provide insight into the future market movements. I have been saying that we need more homes for the past 5 years. If you're a regular viewer of the channel, I'm sure you've heard me plead with builders to produce more homes. And by the way, if you're not a subscriber, please consider clicking the thumbs up like button and subscribing now so that you get all the content when it's fresh and most relevant to today's housing market conditions. This graph plots the median market rent in the US since 2014. It was created from a data set produced by Zillow, created to share rental rates from most of the larger US metropolitan areas. Zillow estimates the median by cutting a slice out of the middle of the rental market by choosing listed rents that fall into the 40th to 60th percentile range for all homes and apartments. In the median market rent graph, this blue field plots the median monthly rental rate, while the red line reports the year-over-year change of the rental rate. Does this look familiar? It sure looks familiar to me. Apparently, it's not just home prices and values that are skyrocketing, so too are rental rates. Look at how the red line jumps aggressively and has August rental rates nearly 13% higher than were rental rates in August of last year. That's awfully close to the runaway rate of appreciation that we're seeing with existing home sales. This graph and its findings only reinforce my concerns about home affordability and a decline in the home ownership rate. It suggests that you have to pay quite a bit more for a home, whether you rent it or you own it. I'm exploring new data sources and hope to produce an examination of rents, prices, and median incomes. When adjusted for inflation, I believe this data will provide a clear view of home affordability and where the market will be heading when the Fed gets aggressive on interest rates, causing these wonderfully historically low mortgage interest rates to fade away. If you have any thoughts or questions on how we can better explore local and U.S. housing market conditions, just drop a comment below and I'll consider it for future videos. If you would like to see a video that explores how a lack of new construction has fueled accelerating home prices, you can view it by clicking on the box on the top left corner of your screen. For a video showing multifamily property price appreciation, just click on the box below it. Please remember to like this video, check out the links below it, and subscribe to our channel so that you never miss anything.